One, two, three. Testing. One, two, three. Hey, everybody. It's Ron from Ron's Basement. Welcome and happy Friday to you. Today, I am doing a review video on a stock that I just so happened to have purchased this morning, and one that I feel pretty good about. The company is Hecla Mining. They are primarily a silver miner based in Idaho. They've been around for over 100 years. I've followed this company off and on. I've owned it several times over the years. So I'm pretty familiar with them and their management team. A couple of things that I like about the company. I'll start with what I like first. Number one, you can buy the stock at what I think is a very affordable price right now. If you look at their balance sheet, which is kind of a snapshot of their current financial situation, they have $2.7 billion worth of assets. And when I say assets, I mean cash, inventory, money that's owed to them, which is called accounts receivable. And then they have a big chunk of that is the assets they own, which are the gold and silver mines that they have throughout the world. So in total, when you add up all the cash and the value of the mines and everything else, that comes to about $2.7 billion. Now, they do owe $1 billion in liabilities or debt. So you have to take that out of, it's kind of like when you have a house. You know, if you buy a house for $200,000 and you take out a $100,000 loan, you have about $100,000 in equity. Well, with Hecla, they own $2.7 billion worth of assets, but they owe $1 billion in liabilities. So when you take that out, their equity, their total equity is $1.7 billion. That's also called net tangible assets. Now you can buy the company, you can buy that $1.7 billion. So if they liquidated everything they had, in theory, they'd have $2.7 billion. But they would have to pay off the billion that they own, so they'd pay that off. They'd have $1.7 billion left. Again, in equity, net tangible assets, however you want to look at it. The market, the stock market, is valuing that $1.7 billion at a $1 billion level. You could buy the whole company, in theory, at the current market price for $1 billion and get $1.7 billion in assets. So the stock is cheaply priced. They aren't making money. They've made money in the past. They didn't make money just recently, but they're not losing a ton of money. And a lot of their revenues are dependent, or it fluctuates with the price of precious metals, gold and silver. So it can be a very volatile stock, I'll warn you. They do have a small dividend. They do have a large silver mine called Lucky Friday, which there's been a labor strike there for about 2 years. It doesn't seem like they really want to settle the strike. I don't know much about it. That's just kind of my opinion. Silver prices have been really low. I think they're kind of just happy at this point letting it sit there. And then there's this robotic mining equipment they're going to be trying out there in the next year. I hope that works, but I'm not overly optimistic. But I hope I'm surprised. They did spend a lot of money on Lucky Friday mine, if I remember correctly, 3 or 4 or 5 years back. So you would think at some point they're going to monetize that. But I think, like I said, they're probably waiting for the price of silver to go up a little bit. So those are my thoughts. Don't make any investment decisions based upon what I said. I took out a small position in Hecla this morning. Going to kind of wait and see where that goes, and be safe with whatever you decide to do with your money and your trading. And thank you for watching. I'm going to sign off from Ron's Basement. Thank you. Go Hecla. Have a good day.